All right, good morning. I'm not going to be streaming for very long today and not trading probably at all today, but I spent some time earlier today going through the NASDAQ and analyzing the market movement. And I'm just going to share the screenshots that I've taken and the slides that I have taken. And let's start with this. Here we got this. Okay, so these are images, screenshots from earlier today. So this was at about I guess 6 something Eastern time, and market maker sell model, low risk entry. And what we're looking at here is a 1 minute chart on the left side and a 15-minute chart on the right side. So the 4 hour was bullish, the 1 hour was bearish, price delivery that is. 15-minute was bearish, and this is 15-minute bearish. We see that we've had this strong displacement below these lows. We've had a bearish inversion for a value gap. We've had respect of the SIBI here, and then another displacement lower. This candle was like, it was like 100 points. It's ridiculous, really something. I think let me see, 620. Yeah, it was about 100 points, 620, 520. Then we were climbing back up into the SIBI, and my question was, are we seeing the beginning of a market maker sell model over here? And this is a measuring line, which shows us that from here to here, that's right, there it is 100.5 points. And if we zoom into the 1 minute, then this is what we're looking at. From around, I guess, 520 or so here, up to about not quite 620, but there we go. So 505 to about 605. Okay, that's the 100 or so points. And are we going lower, 100-point range from original consolidation, the bottom of it, to possible smart money reversal up over here? All right, let's go to the next slide here. So then what we had was a little bit later. This is a 1 minute on the left side, and now it's a 5 minute on the right side. I marked off the 550 macro open, and this is a 630 candle where we suddenly got bullish. So from the 550 macro open, we dropped a little bit. We came up above it a little bit. We went below it a little bit, went above it a little bit, and then at 630, for reasons I do not know, we flushed. I pointed to what would have been a good entry inside this bearish inversion for value gap if we were waiting for an inversion for value gap. When price came back up on the 1 minute, wicked into it, and then came back and then continued lower. So this is also marking off that would, if we would exit around here at roughly around the bottom of this sell side liquidity there, that would be about a 29-point move from entry, well, from here. So if we enter a little higher, this is just a rough estimate to give us a sense of the distance. And this would be down here at about this level would be 43 points. The entire range is 100 points. I'm aiming for 20 to 30 points on most trades, and just for catching multiple ones. Let's see, note the macro open price drawn from 550 that we got there. So I heard this from someone who reteaches some ICT stuff, but I don't know where. I mean, I don't know where ICT himself talks about this. If I assume he does, that macro open, often we will go, we'll open and then go to the one side of it, and then we eventually move to the other side. So I don't know if this is the real move. We fake out to one side, like, up, and then the real move is to the downside. All right. Next slide we have here. Oh, let's see, on the 5 minute, I put up the dealing range from here to here. So we had this dip down. We had come back up to optimal trade entry level, and our entry at about below 590, 580 something would have been just above equilibrium. Okay, although that would be on on this leg, but if we're looking at this leg, then it certainly would have been significantly higher than that. I believe the next slide looks at that. Okay. Now, so price came down. We're still on the 1 minute on the left side. I think I stick to the 1 minute on all the slides on the left side, but I do change time frame on the right side. So we're back to 15-minute here. And on the 15-minute, remember I was saying maybe are we coming down and forming a market maker sell model because we had that bearish price delivery. So, well, we came down and then we hit the 1 minute BISI here and then we curled back up, continuing higher. So that is, we would have had that entry, as I pointed out, a good entry would have been inside the inversion for value gap, come down here. But because 4-hour price was bullish price delivery, as I mentioned at the beginning, I didn't show a 4-hour chart yet. 1 hour, I think I said, was bearish. And yeah, 1 hour was bearish and 15-minute was bearish. So because of that, it would have been prudent that if we hit any kind of bullish PD array around equilibrium of the range, and I drew the range from this low to that high, right, as we swept liquidity over here. This, figuring this would be what it would be, I think, roughly on the 5 minute or so, certainly on the 15-minute, that's where it would be. That's where the range would be. So if we were to hit any kind of bullish PD array around equilibrium, which we have, and we also have, again, a bullish inversion over here, right? Then, we should want to take profits very quickly. And if we had taken profits, once we hit this chop, if we had gotten in this distance, it would have been approximately a 20-point move. I usually, the numbers I'm putting here are less than the exact range because I'm assuming we wouldn't have gotten the full range. So 15 to 20 points, not bad. And this is the same view here. Price came down, right? This would be a lower BISI on the 15-minute, but this is the same level as we have over here, right? And then we came back up. So as we're coming back up, let's go to the next slide. All right, and let's see what's happening over here. Another reason to take profits quickly is because the 4-hour price delivery is bullish, typo, even though the 1 hour is bearish. So the higher time frames are bullish, so we need to be aware of that. Not everything is aligned in the bearish direction. So now we see price maybe forming a market maker buy model on the 15-minute. Right, so now looking back to 15-minute, what first looked like we were going to come down into a market maker sell model, we may have gotten a small scalp over there, but now question is, are we coming back up to the intermediate term high, relatively equal highs up over here on the 15-minute, right, up inside the SIBI? Are we going all the way back up there, or are we just going up maybe to optimal trade entry to the bottom to retest this SIBI over here? Or maybe we're coming up into this mitigation block. We have swing failure, price came back up, so prior to that, this down close candle would be a mitigation block where we expect price to come back up and then respect that and come back. So it's not yet clear what's going to happen. So we're going to keep a close eye as to what is possibly going on. It's about, let's see here. We dropped below the 550 macro open, right? 550 macro open was, where is that? That was here. Not just, yeah, 550 macro open was about between like 595 or so. So what was I referring to here? I guess we dropped below it. Maybe that was the the manipulation phase before going higher. Yeah, I think that's what I was referring to. 550, maybe this little bit up here was not the manipulation, but it was the more significant drop down here before coming above the macro open at about above the 595 level, right? So 595, we're up at 609 on this screenshot. So that would have been the manipulation. I guess I took it off. Manipulation down before going higher. Are we going up to this intermediate term high, relatively equal highs, which we see over there? The arrows are pointing to where the focus was on the previous slide. Oh, this is a 5-minute chart. That's right. This side, this time, this left side is a 5-minute. All right, next slide here. We are back to the 1 minute. And we see that we could have had several possible entries, long entries, as we curled back up from the 1 minute BISI here once we respected that. So what we could have done was we could have entered at A, right? We pushed up, we had a BISI over here, came back down, respected it, and then closed above which macro is this? I guess that's the 650 macro, right? So that's the 650 macro. We wicked below it, came below it. That's the manipulation phase, and then that would be the expansion or distribution phase. So we and we had looks like we had a small inversion, bullish inversion over here, just above or overlapping with this BISI, the 1 minute BISI. So we could have entered bullish once we crossed above the macro open time, or even lower, possibly. B, we had on the 5 minute, we had an institutional order flow entry drill, which is a slight wick into a fair value gap. We had that on the 5 minutes. We have a 5 minute, that's a 5 minute. We have a 5 minute BISI forming, and we just wick down into it. That's at about the 600 level. That would, I presume, be this one, right? We had that wick down into it, and then we continued higher. So the B entry would have been higher than the A entry. Notice how price retraced at 722 here. This candle, we came back down before continuing higher. All right, it came into this 1 minute order block. All right, I didn't see, it didn't come all the way down into this, I guess this, what would probably qualify, I think, as a 5 minute bullish order block. Although there's a lot of chop over there. I'm not, it's certainly not a neat one, and it's in the middle of the range, so don't know. And I have the same questions about this. Again, I'm learning this, so if you know better than me, please leave a comment. Had we taken profit once price started weakening up here, it would have been a 20 to 30 point move, depending on where we got in. So that's also, that would have that would have satisfied my objectives. Although I'm always happy to take more, but if I have a 20, 30 point move, take it. Now, I forgot to point out earlier that in the previous slide, so I put it up here, that we had an even earlier entry possibility down over here. Let's go back. We had a bullish inversion over here at this level, 580s, 580 something, where we could have entered 585, right? We wicked into the bullish inversion, and then we came back up, respected this BISI right above it. That also could have been a time to enter. And notice the 730 retracement as we approach consolidation on 5 minute. Consolidation meaning up here, the higher this, we're coming back up to the original consolidation of this if it is a market maker sell buy model. Or we just might be, I guess original consolidation would really be all the way up over there, and this would be the first stage of distribution, I guess. So where were we? Okay. So yeah, we start to have some resistance. We no longer have this low resistance liquidity run. Now we're coming up against resistance once we're hitting this level. Next is, okay, then price dumped. Let's go back, and for comparison's sake, we have this BISI here. And on the next slide, I drew this in so that it's, because this is from an app, plugin or whatever it is. So I drew it in so we could still see what happened here, but we never made it up to the intermediate term high, relatively equal highs. Instead, price dumped and flushed right down. Let's go back. And this was, I guess, don't know if I put this down where the 750 macro was. I don't see that I marked that off. I might have marked it off later on. Did I mark it on the next slide? Yeah, that I marked on the next slide. That's the 750 macro. But this was before the 750 macro, slightly. I guess this was the 750 macro line. So for whatever reason, we came down here and we dumped. And now this is looking at the hourly. And if we draw a dealing range on the hourly from this swing high to this swing low, we see that this whole move here was on the hourly coming back up into optimal trade entry. It looks like we're setting up now, it looks like we're setting up to go take out that what we had originally seen back on the very first slide, right? My question was, are we setting up to go short? And it turns out, no, we're going to go higher first. This dealing range is not the one I was showing in the hourly. The hourly dealing range, I think, goes up till here or even up to here. Let's see, this level would be over 700, and this level would be a little under 700. Yeah, so, no, one more. Okay, hourly, we were under 700, right? So it was not that one up there, it was under 700. So we were just coming up into the optimal trade entry, optimal trade entry range, looking like we're going to go lower, possibly down from 575 down to 500 or even lower. Okay, this is on the hourly, and this is on the 1 minute. Okay, I just spelled that all out. And I think this is my last slide. We started on the 1 minute, we started tracing back up a little bit. And let's see here, we're looking at the 4 hour. And I said on the 4 hour, we're likely due for a retracement down to, this is the dealing range, the 4 hour dealing range. From, it looks like it got cut off a little bit at the bottom, I hadn't noticed. Like from the top of the dealing range, or it really should be up there, to the bottom of the swing low to the swing high. Equilibrium is over here, this 50% marker right there. We're very much in premium on that dealing range. And it looks like we're probably going to go lower. And that could be from 587 down to the 400 or even lower. I did notice that we have a bullish breaker on the 4 hour. We had a low and a high, and a lower low and a higher high. We may very well be coming down to test, because we still have, this is the 4 hour bullish price delivery that I mentioned at the very beginning. There's a very reasonable chance we're going to come back down, maybe not all the way down to equilibrium, but likely come down and retest the bullish breaker. And before going higher, we have this regular trading hour gap from a week ago. I think it was last Tuesday, more than a week ago, I think. So this is what I was noticing. And if we switch now back to the live screen, let's see what's happened while we were talking. Take that off. So 8:30, we had 8:30 a.m. news. I don't even know what it was. It was, what was it? It was, it was a bunch of things. Initial jobless claims and more. And we've got more news coming out at 9:45 and 10 a.m., manufacturing PMI, services PMI. But looking at the hourly here, let's go back to the 4 hour. It does look like there's a good chance that we're curling back down. So this would be the bottom of that, the range we were looking at, I think. Let's see. Yeah, before that curl back up. I don't know. I have to look at it. Let's go back to the 15 minute. All right. Here we still have some markers. Help me identify. Yeah, this was the whole thing that we were looking at, where we, over here, we came down. That's where we could have gotten the 20 or so points, and then we pushed back up and then displaced lower. So on the 15 minute, we now have an inversion for a value gap, a bearish inversion, which we came back up, went through, but then came below again. So now we've inverted this SIBI. Well, not inverted, but rather continued it, but with another SIBI here, and price is continuing down. There's a, looks like a very good chance we're going to see another 50-point drop probably very soon, at least. And we are, there's those relatively equal highs up there, which we never made it to, but we did come back up into optimal trade entry on this price, this dealing range here, which the 1 hour dealing range from here down to there. I just moved something by accident. What else was there? Let's go back to 15 minute. Okay, so on the 15 minute, and then I also marked off the 4 hour. This was the 4 hour bullish breaker that we had from back over there. My guess is that we're going lower. Tomorrow is non-farm payroll, so I believe ICT says today is not a good day to trade. I'm still learning these types of things. I'm a student, do not profess to have mastered this yet. I'm just doing this on the internet mostly because it forces me to speak it all out loud and put it up. And if someone else happens to find it, wonderful. If not, well, I did it for myself. So that's good too. We have this respecting the SIBI up there. We've, although, you know, after coming back, rebalancing this SIBI, but we're now displacing lower. Let's go to the 5 minute. I suppose we have an opportunity for a it was about a 50 points here, possibly. I think I'd probably want to see a retracement into this leg here before entering short. But maybe not. Maybe that's already been done. What time is it? We have market open in 20 minutes. Anyway, I hope this was helpful. If it was, leave a like and a comment and subscribe so you can find me again. Yeah, so that's my expectation, is that we're going lower. I think that if we look to project this manipulation leg up, if I know what I'm doing here, and I'm not sure I do, then that takes us, you know, the 2.5 to 3 brings us down there. 3.5 to 4 puts us into testing the bullish 4 hour bullish breaker territory. All right, I'm done for now.